All right, what is up, guys? Welcome to the Sunday night mentorship call. It is Sunday, and it is nighttime, at least for us who live in the United States, and so that means the weekly webinar session is a go. So we are starting at exactly 10:30 p.m. Eastern Standard Time, and my goal for tonight is to keep it under an hour. So for you guys that are watching the recording, you don't see a full 2-hour-long YouTube video that you have to watch over. So first off, really quick, I wanted to cover a couple things. I'll just name you a list of things I wanted to cover tonight, and then we'll go straight through it. Okay. The first thing I wanted to cover was the 6-month plan. I wanted to go a little bit more in depth, especially covering the risk management column. I also wanted to talk about indicators. That's going to be pretty big because a lot of people wanted to, for me to cover trend lines, horizontal support resistance, basically all of the indicators that I use on my own personal account, as well as signals and patterns that help me look at the markets, analyze the markets. Okay. As well as break down the markets at the very end. We're going to break down the markets, we're going to analyze them as a team, and also we're going to talk about entry points and when to enter a trade and exit a trade and how to be a successful trader like that. Okay, so really quick, guys, I'm going to talk about the 6-month plan, so let me share my screen with you guys, and we can go from there.
What did you say? Any questions?
Well, actually, if you want, we could actually do some questions after I cover all 4 things. Is that cool?
No, yeah, I didn't hear you.
Okay. Okay, cool. Yeah, let me just go through these steps really quick, and if you guys have any questions at the very end, then we can get through that. Okay. So I have on my screen the Elite Team 6-month retirement plan. Okay. And again, if you don't already know what this is a detailed step-by-step, week-by-week, 6-month plan to take any person, even the average Joe who's never traded a day before, going through the Elite Team, okay, with a minimum of opening their live account with $100 and taking that $100 and eventually taking it to almost 6 figures by the end of 6 months and creating a very nice income after that 6-month time frame. Again, just by incrementing our lot size very, very small and just keeping a very easily, very attainable PIP target for the day and for the week. Okay, and so my main purpose was, again, to divide 2 columns, one for 50 pip a day target, another one for 100 pip a day target. And I really, for myself, I really only look at the week target because I just like to see how fast I can hit that week target, whether it's Sunday or Monday or Tuesday, or however fast I can hit that pip target for that entire week. Okay, and so if you're going for 250 pips a week, this is going to be your column right here. If you're going for the 500 pips a week target, you're going to be looking at this column right here. Okay. The main thing that I wanted to talk about really quick was the risk management column. And the reason why I put this here is just to give you guys a better idea of how much you're actually going to be risking whenever you place a trade with a 0.01 lot size or a 0.5 lot size or a 1.0 lot size, okay? And to give you guys a basic idea of how much 10% is, okay? 10%, I know I have this column where it measures for you the amount of money you need in your account for at least 10% risk management, okay? And so for a 0.01 lot size, you need at least $50, if not more. That's what this little thingy-majigger, I'm an engineering major for crying out loud, I don't even know what this means. So for $50 or more, you would want at least $50 or more in your account in order to place a 0.01 lot size, okay? And again, that's for 10% risk management. Again, that's a pretty high risk management. Usually traders tend to risk about 4 to 6% of their account per trade.
Mark?
Okay. Yeah, what's up?
Just real quick, you said you want a 50 or more. Shouldn't all those signs be flipped?
Should it? Less or less than, greater than?
You want to have greater than 50.
So,
Right.
So what does this mean right here?
You want to have less than 50 in your account.
Yeah.
So wait. I thought this was 50 or greater. That's not 50 or greater?
It'd be less than or equal to 50.
Wait, what about this? What about this? So this is 50 or greater than?
Yeah, 50 or
that
greater than.
works. That works.
Okay, well, yeah, I mean, hey, this is a live call, so we're going to keep it like it is. We're going to keep it real, guys. So yes, you need at least 50 or more, thank you for catching that, to place a 0.01 lot size in one trade, okay? And again, this is for 10%, so that's pretty dang high. Usually traders tend to risk 4 to 6%, and if you're really going out, balls out, and you really know what you're doing, then you could risk 8 to 10%, but that's pretty dang high. I know traders that only risk 1 to 3%, and that's normal. Okay, so 10% is pretty dang ballsy. So for you guys who have never traded a day before, who are just opening up their live account, try to stick. I know you guys want to make $1 million, tomorrow, but try to stick from the 1% to the 4, 5, 6%. 6% is going to be okay. You really know what's doing, what the market is going to be doing. Okay, and 10% is for, after experience, after you understand the markets a little bit more. You practice and practice. Okay, well then after you're used to trading 4%, 5%, 6%, you can see how that affects your account after you're risking that small of a risk management level, and then from there you can scale up to maybe 7% and 8%, then eventually to 10%. Okay, but again, I just wanted to write down and calculate for you guys how much you need in your account to risk a 10% risk management level on one trade. So let's just say for a 1.0 lot size, you need $5,000. How much easier would it be or more?
Even better.
Even better. So for you guys like me who are engineering majors and don't even know what that symbol means, you can just read that $5,000 or more in order to place a 1.0 lot size. But again, that's risking 10%. If you only want to risk 5%, you would need $10,000 in your account just to place one trade with a 1.0 lot size. Okay? So did y'all have any questions covering the risk management column? Besides, all these symbols are wrong. Besides that. Okay, cool. So next on the list is indicators, and that's exactly why I pulled up my demo account to show you guys. The reason why I pulled up my demo account is just because I like to market my demo account so that I can keep my live account all clean and fancy. So what we can do is we can talk about the indicators. Okay, so the indicators that I use on my own personal account to help me trade and to help me analyze the markets. Okay, every single day and every single morning. For you guys that have already been in the lead team for a while now, you guys understand and know that every single morning I like to post why the markets moved the way that they did. Okay, what signals appeared, what patterns appeared, and how we analyze the markets to see basically in the future, to predict the markets and analyze them as best as possible. So what we can do is I can show you guys what indicators that I use and how I use them to be a successful trader. Okay, so my main indicators that I use, they are a few things. I don't know if you want to write them down, but the first one is trend lines. Okay, and trend lines are basically lines in the market. They're just red lines in the market that I use to, again, just get a better picture of where the trend might be going. Okay, so I use trend lines. I use horizontal support and resistance lines, and horizontal support and resistance lines are almost identical to trend lines, except they're horizontal. So they're just flat lines in the market. Okay? And again, I'm going to go more in depth in a little bit, but I just wanted to name just the main few indicators that I use. The next one is EMAs, or the foreign exchange market moving averages. Okay, so or just moving averages, what people like to call them. They're pronounced, or they're called EMAs. Okay, and all that EMA is, I just have one in my demo account, which is this red one, and all that it shows you is just the moving average of that chart. So for the Euro USD, this is the moving average for this chart. And again, you can use different moving averages for different charts, and I'm going to go more in depth in a little bit. Another thing I use is Fibonacci's, which is right here in the top left corner, Fibonacci retracement. You can call them Fibonacci's, you can call them Fibs, you can call them Fibogucci's, you can call them whatever you want. And again, that's just a way to again, just to analyze the market. Okay, just to break down the market and just to give you a better idea of where to look for reversals. Okay, those are really good signals or indicators for reversals. Also, another indicator I like to use is the news. Okay, and I don't know if you guys have heard of red folders before or not, but we can talk about that. Also, I like to use signals and patterns to break down the markets for me. And so one of the main signals I use is the MAAW formation as well as the WVVM formation. Okay, that's MAAW and WVVM. Okay. Another signal I like to use is a stop hunt low high, as well as a stop hunt high drop or stop hunt high reversal. Okay. Again, those are just more signals and patterns that I use to depict the market and analyze them. And lastly, I also like to use railroad tracks, railroad tracks. I also like to analyze the markets using evening stars or morning stars, whatever you like to call them. Okay, so let's jump to the very top, trend lines. So trend lines, I don't know if you guys have noticed my pictures that I use to call my trades, but you guys see those red lines marking up my charts like crazy, right? Those are trend lines, and what they're used for, again, is just to help us analyze the market and help us show exactly what the trend of the market is doing. Okay, because let's just say that we didn't analyze a market. Let's just say JPY. Dang it, I marked up that one. Let's just say we have a market like this. Okay, so we don't have this red line here. This is just a very clean blank chart, right? Whenever we look at this chart, let's just say this is live, right? Let's just say that it's live and we look at this chart. We don't really know what's going on here. And so it's really hard to depict where the chart is going, especially where the trend of the market's going, okay? And so if you're looking for signals or patterns in the market, it's going to be a little bit harder for you. So what we like to use is trend line. So at the top left of our screen, there is a diagonal line, and we can just click on trend line. And the purpose with these, again, is just to help us analyze the market and show for a reversal in the market. So right now we're looking at the Great Britain pound versus the Japanese yen. And with trend lines, what we want to do is we want to start with the daily chart, and we want to work ourselves down. Okay. So we're looking at the daily chart right now, and if you guys don't already know, every single candle in this market represents one daily movement in the Great Britain pound versus the yen. Okay, and so what we want to do is look for a pattern in the market whenever we want to place trend lines. Okay, and whenever we place a trend line, we don't want to place them at the end of the wick. We want to place them at the end of the actual candlestick. Okay, so these little sticks at the very end are the actual wicks, and the body is called the candlestick, and we want to place them at the end of candlesticks. Okay, and to measure the strength of not just these trend lines and not just these horizontal support and resistance lines, but just an indicator in general, to determine a strength of an indicator, there's a lot of different indicators, or there's a lot of different ways to determine one's strength. And one of them is how many candlesticks it falls true with that trend line or that indicator. Okay. Let's just say that I have a trend line, and let's just say that no, I don't like that one, that example. Let's just say I want to measure the movement from here down to here. Okay? Let's just say that, again, this is the daily chart, so we don't really like to use a daily chart whenever we do our analysis on the charts, but this is just for an example. Okay? So we're looking at the charts, and this is live, so none of this past this candle has been painted yet. Okay, only this part and back. So we're seeing we're only analyzing on the daily chart the trend of the market. So where is the market headed to? Okay, well we can see that it's pretty bearish, right? If it's falling, it's bearish. If it's rising, it's bullish. Right now we can see that it's a little bit bearish, and it's following true to this trend line because the candles are below this trend line, and it doesn't break until about here. Okay, and so this isn't a great example because this is the daily chart again, but we would like to mark up our charts from biggest to smallest. So then we would move to the 4-hour chart, and the 4-hour chart, let's see if we can find something really quick to show you guys, just for example. Okay, I think I found something. I'm going to go to gold. Place 0 here. Okay, so place a trend line. This is the 4-hour. Okay, that was a 1-hour. So to place a trend line, we would place it at the end of the candlestick, and we would bring it down, just like that. Okay. And again, to determine the strength of an indicator, we see how many candlesticks it actually stays true to that trend line. Okay, trend lines and horizontal support and resistance lines, the purpose of those two indicators are to help us look for reversals in the market. Okay, to help us look for reversals in the market. So whenever this candlestick or whenever this trend of the market stays underneath this trend line, we know that it's not going to rise. Okay? There's not going to be a sudden burst of rise in the market because it's staying true and it's holding this trend line. Whenever this drops and it comes back, this pullback is called a retest. So whenever I tell you guys, hey guys, look for the retest in the Euro USD. What I mean by that is this market is already moving down. It's already moving away from this trend line. But whenever it comes back to retest this trend line, it can do one of two things. It can either break this trend line and shoot up, or it can hold and it'll drop. Okay? So one of two things. It can either break and reverse, or it can hold and continue to move in the same direction, because we're measuring reversals. Okay? So again, it drops back down, so it holds, it comes back to retest. Right here, there's only one of two things. It can either break and rise, or hold and drop. And guess what? It holds and it drops. Drop, 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 drop. Comes back, retest. This is not the best example, but it comes back and retests, holds, drops. Okay? Let's just say that this trend line, for example, ends here, comes back, and it retests, and it holds, and it drops. But guess what? Whenever it breaks, and it rises. Okay? So that's the whole purpose with trend lines. What we like to do, and this is just for my students who ask, what do we do on the weekends, or how can I get ahead whenever I'm trying to study, if I'm not watching webinars, what do you like to do? I like to do my homework. And whenever I do homework, this is exactly what I do. I take an open chart, just like, let's just say for the Euro USD, and I just like to mark it up. Okay, I like to see what the market is actually doing. That's actually what we're going to do at the end of this call. I like to mark up the chart. I like to see what the heck is going on, what the market makers are doing just for this entire week, which is what these lines are for. And I like to cover with you guys how we can better get a better idea, I should say, of what we can expect in the upcoming days and the upcoming weeks in the market. Okay, so those are trend lines. And really quick, we're going to talk about horizontal support and resistance, because it is practically the same thing as a trend line, except they're just horizontal. So these trend lines or these indicators, again, are strictly used for looking for reversals in the market. Okay, so I'm going to go to the 1 hour, and I'm going to give you guys, or at least try to give you guys, a pretty good example of a horizontal support and resistance really quick. Don't like it. What if I just show you guys one that I already have marked up in my own account? How about that? I think that would work better. So this is the Great Britain Pound USD. Okay, I like this one right here. Okay, I know there's a lot of trend lines, so bear with me, but we're looking at the 1.57767 trend line, horizontal trend line on the Great Britain Pound US dollar on the 1 hour chart. Okay, so it's not the highest horizontal line, but it's the second highest. Okay, and I marked this back on the 24th of August. Okay, right whenever this candle painted, because I saw that it came back, or sorry, it rose a little bit, but it came back and it painted down here. And so I knew that there was confusion in the market, and market makers didn't want to go any higher because of pending contracts. Okay, so what I did was I placed this horizontal trend line right here. And so again, the same thing with trend lines is that whenever it comes back and it retests, one of two things. If it breaks, we know it's going to reverse and it's going to rise. If it doesn't, it's going to hold and continue on. Okay? And so it did. It held, and it pretty much stayed at the same price level until it came back and it retested right here. And whenever it retested, guess what? It broke, and so it shot up. Okay, and it wasn't the biggest rise in the world. But this is just a short little example for you guys. It shot up, and guess what? Right back down to retestment. And whenever it retested this time, it broke, and it had a pretty nice break. And it didn't come back to retest, it just continued to drop. Okay, so very quick example to show you guys what trend lines, which are found, again, on the top left, right next to horizontal lines, and what they're used for. Horizontal support and resistance lines, again, you want to look for multiple candles where the prices were rejected. Okay, so wherever you find the more candles where the price was rejected, the stronger that horizontal support or resistance line is going to be. If there's just, let's just say, for example, there's just this one candlestick right here. Let's say that we placed a horizontal support and resistance line right here. Okay, and for you guys that want to know the difference between support and resistance, if the market is above the line, for this example, this line acts as support because it's supporting this market. But let's just say for this chart right here, this market is below this horizontal line, it acts as resistance. Okay, so really quick, really easy. But let's just say that this chart only hits this one candlestick and it only fails, or sorry, the price only rejects at this one point. That's not a really strong horizontal support and resistance line. Let's just say though that the market came up and it came back to this exact same point. It held, so it went back up. Let's just say the market came all the way down here to this same horizontal resistance or support line, and it held and it came back up. Okay, so now there's multiple points where the price was rejected, so that tells us it's a pretty strong resistance line.
Stuck in the market stick or what?
Wait, what?
Sorry, that was my brother.
Oh, okay, no worries. Okay, let's see. Let me see if I told you guys everything. Okay, so we do all our analysis in the 4 hour, the 1 hour, and the 15 minute. Okay, 4 hour, 1 hour, and 15 minute. Sometimes I do like to enter and exit trades on the 5 minute because I do scalp. I'm definitely not a swing trader. I'm definitely not a position trader. I don't like to put a trade on Monday and leave it for a couple days and take it out on Friday. I don't like to put a trade in May and take it out in December. I think that's a little bit boring, and so for me as a scalper, I like to put in a trade and exit in minutes and hours. Okay, and so for the 15-minute, I like to see exactly where the price is and how the price action is at that very point in time. Sometimes I do like to just stick with the 15-minute, but our analysis sticks with the 4 hour, the 1 hour, and the 15-minute. Okay, really quick, let's jump to EMAs. EMAs, I only have one on my demo account so far. And this EMA is just the curved line that you see here in red. And the importance of EMAs is all that it stands for is the moving average for the chart, for the market. Okay? So it gives you a better idea of how the market is moving. There's different EMAs to use, and I actually have them on my live account on my phone. And so I'm just going to read them off for you guys. If you do want to write it down, if you already have it, cool. If not, you can write these down. But I have 5 different EMAs. The first is the 5 EMA, or the 5 moving average, and that's the yellow, or we like to call it the mustard. Okay, so the 5 is the mustard. The 13 EMA, or the 13 moving average, is red, and we call that ketchup. The 50 EMA, 50, the 50 EMA is the water, or the light blue, or the turquoise, whatever you want to call it. We like to call it water. The 200 EMA is the white, or we like to call it the mayo. Okay, so whenever you hear the look for the railroad tracks on the mayo, okay, that's a 200 EMA, and as well as the 800 EMA, or we like to call it the blueberry or blue, or whatever you want to call it. And again, EMAs, they are helpful to look for take profits. Okay, where do you want to set your take profit? At the 50 EMA or the 200 EMA. Okay, it's a great level to take or to set your take profit. As well as signals. Okay, so for signals using EMAs, this is a little insider tip, and I don't know if you guys already know this, but using an EMA, not all the time, but whenever you see the market breaking an EMA, you know it's going to go in the opposite direction. Okay, so for this example, the market is underneath the EMA. As soon as it breaks, we know it's going to rise. Okay, retest, EMA, drop. Retest, break, rise. Retest, break, drop. Okay? Just a cool little insider tip. I don't know if you guys already knew that or not. Yeah, what's up?
Does that mean the EMA is always ahead of the market, or?
It is at the same time as the market. It's the same time. So it's being uploaded live just like how the market's being live.
Okay, so if it breaks, for example, it'll basically, you won't be able to see the EMA line, right?
You will, yeah. You can see the EMA line whenever you're trading.
Okay, I see what you're saying now. Yeah, never mind.
Yeah. If you guys have any questions about how to set up EMAs on your phone or on your computer, just send it through the group chat, and we can walk you through that. Okay. Next one, sorry I'm going really quick with this because I do want to break down the markets with you guys tonight, and I do want to keep this under an hour. So the next on our list is, Fibonacci's, okay? So we can use gold, for example, and, I already have this set up. Okay, so Fibonacci, let me just delete this then. So Fibonacci is this tool, top left, Fibonacci retracement. I like to call them fibs. And the main purpose with this, again, is to look for reversals in the market. Okay, our whole job description, guys, is to look for the highs and the lows, and that's it. If we know how to discover the highs and the lows, and we know how to analyze the markets for highs and lows, that's the name of the game. That's the entire business, guys. The highs and the lows of the market. Okay, and so Fibonacci is a great way to measure that. What we need to do is we need to place these Fibonacci tools at the end of the wick. Okay, it's going to be a little bit different than trend lines and horizontal lines. These are going to be measured at the end of the wick. Okay, so what we do is whatever chart you want to look at. Again, guys can do this on your own time for homework. You guys can analyze the market as much as you want. Choose any market and look for the last major move. Okay, look for the last major move and place your your Fibonacci at the very top to the lowest low. Or you could do from the lowest low to the highest high. You can do from the highest high to the lowest low. It really depends on you. It's up to you. There's no wrong answer. Okay? And I don't know if you can see these yellow numbers on the right-hand side, but what we like to trade off of is the 38 and the 62 fib level. Okay? So the 38.2 and the 61.8. We just call them 38 and 62. What we like to do is we like to trade off the 38 and the 62 fib level. Okay? What does that mean? Well, whenever we look at the last major move in the market, which I would consider this last major move to be the drop in gold. And oh, sorry guys, I forgot to mention. Always only use fibs on the 4-hour chart. Okay? Only use Fibonacci's on the 4-hour chart whenever you're analyzing the market. Okay? Now, back what I was saying. Last major move was this gold drop, again, to the highest high, lowest low, lowest low, highest high, and we measure off the 38 and the 62. So, whenever we see this pullback, another great indicator is to see, okay, well, is it going to hold at the 38? Maybe, and it did. Is it going to hold at the 62? Maybe, okay, maybe not. Okay, but again, it's just another great way to indicate where the market can hold and when it can break. It's just another indicator to use for reversals. Okay, really quick. Awesome. Let's see, Fibonacci news. Okay, so news is another great indicator I like to use, and one of the major news tools I use is forexfactory.com. I'm just going to open really quick. Forexfactory.com is a website that retail traders use to analyze news in a very easy way. Very, very easy way. They depict the news in different colors of folders. Okay, there are yellow folders, there are orange folders, and there's red folders. Okay, we like to look at major news. We like to look at only news that would really affect the market, and those news are indicated by red folders. Okay, so today is August the 30th, and we see that at 9 p.m. Eastern Standard Time, there was a red folder for New Zealand dollar. Okay, that happened 2 hours ago. Usually Sundays they don't really have a lot of major movement, even if they have a red folder. But if we click on tomorrow, we can see that I would take a look at this Australian dollar. So tomorrow at 9:30 p.m. Eastern Standard Time, there is a red folder for Australian dollar. Now, what does that mean? What does that tell us? Well, that doesn't always have to mean, I don't want you guys to understand wrongly, it doesn't always have to mean that there's going to be a major movement at that time, but more than likely there will be. It can be a spike, it can be a hammer, it can be a full movement in one direction and an entire pullback in 15 minutes. Okay, but usually what this means, the red folder means there's going to be major news comes out and there's going to be a major move in the market because of that news. It is all going to be dependent on that news. Okay, so keep that in mind for tomorrow at 9:30 p.m. Eastern Standard Time. September 1st, there's a couple red folders. Australian dollar again, Great Britain pound, Canadian dollar, USD. Okay, so I wanted to show you guys an example for USD because, like you guys know, there's a lot of currency pairs that have the United States dollar in them. Okay, how can we measure or how can we tell which currency pair this is going to affect? Okay, because there's Euro USD, GBP USD, CAD USD, AUD USD, Yen USD. Okay, all these different USD currency pairs. Usually, guys, it affects every single one of them. It doesn't have to be, but usually it affects every single one of them. For myself, I only like to look at a few. I like to look at the main ones: Euro USD, GBP USD, CAD, and AUD. Sometimes NZD, but mainly those four: Euro, GBP, CAD, and AUD. Okay, and like I said, this can be, let's just say this is a live 15-minute chart. Let's just say, okay, and let's just say that it's 9:30 p.m. Eastern Standard Time. We're looking at Australian dollar. Don't mind this gold here at the bottom. This is Australian dollar. It's 9:30 p.m. and news is about to come out, right? Let's just say this candle painted and it drops, right? Number one, we do know which way this will drop, and from signals and from the indicators that we have in our markets, on our charts that we have marked up. And number two, we can tell by mainly using trend lines and the horizontal support and resistance lines. Okay, Fibonacci's not so much. News doesn't really affect Fibonacci's. They mainly affect trend lines and horizontal support and resistance. So if you guys know how to correctly measure trend lines and horizontal support and resistance lines, you'll get a better idea of not just what direction the news candle is going to come out, but how big is it going to affect that candle? Is it going to drop 50 pips? Is it going to drop 100 pips? Is it going to raise 50 pips, or is it going to raise 100 pips, or even 200 pips, right? I don't know if you guys saw this, but I'm going to pull up NZD really quick. And NZD, a couple of days ago, on, I think it was Sunday night, actually. Sunday night, there was a red candle for NZD, and guess what happened, guys? I know this is a 1 hour chart, but just bear with me. This 1 hour candle painted up here, and it dropped this entire way down, okay? But guess what? It didn't paint until it came back and it retest, or not, it didn't retest. It came back and it painted all the way up here. Now, what does that mean? Market makers are little douches. That's what it means. Because guess what? Whenever the market makers press their little buttons to bring the market all the way down here, not only does it activate pending orders, but it also activates stop losses. So retail traders lost a lot of money here. Okay,
Yeah.
For us, we can actually turn this loss into a huge win for us. Okay, because look at this trend line I had marked up here. Okay, we understand that if this were to break, this would continue upwards, but it didn't break. It held, and guess what? It held all the way down here. Okay, and so there's multiple ways to capture news candles, and trend lines and horizontal support and resistance lines are just a few ways to capture them. And to be quite honest, you can't say how many pips it's going to drop or how many pips it's going to raise. You really can't figure that out. For myself, and I'm going to talk about this on entry points and how to really trade at the end of this call, I'm going to talk about stop losses, and I'm going to talk about moving up your stop loss, okay? Because that's the really only way how I exit a trade, just by stop losses and moving them up closer, okay? So those are that's the news, and again, we use forexfactory.com for the news. Really quick, we're going to talk about MAAW and WVVM. That's just a signal pattern that we like to use whenever we're looking at the markets, either at the 15-minute, 1 hour, 4 hour. And again, this is NZD USD, and it's exactly how it's pronounced. We look for W's, we look for W's, we look for WVVMs, and we also look for M's, A's, and W's, okay? So you can argue that this looks like an A to you, correct? Obviously it doesn't have the little cross over it, but we can argue that this looks like an A. We can argue that this looks like a V. We can argue that this looks like a W. So what are we really looking for? Because if you really wanted to, you can spot out a V like right here. You can spot out a V right here. You can spot out a V right here, right? this takes a lot of practice. I'm not going to lie to you guys, it's not very easy to spot signals like MAAWs and WBBMs, but I promise you, whenever you do find, that's a gap, whenever you do find a W, a clear W, a clear V, another clear V, you can spot an M like the back of your hand. And M's and W's are signals, guess what, that indicate reversals in the market. Okay, that's all that we're looking for. It's just reversals in the market because we can catch those reversals if we know what we're looking for. Okay, so there's actually a pretty cool example. So we can see here. Okay, this is pretty cool. I like this one. So we can see here this is NZD USD, and you guys need to bear with me on this one because this is a very outstretched example, but I'm going to use this one just for purposes that this is a live call. Okay, the market drops down and it forms this leg. Okay, this is what we consider the first leg of the W. It drops back down. Okay, bear with me, guys. It drops back down and it raises up for a W. Okay, so the reason why we consider this a W is just because it does not come all the way back down and break this leg. So this is considered one leg. Okay, we found a W. Guess what? We found a V right here. Okay, we need to find another strong V placed here. So whenever we find an M, we know an M. Well, number one, we know that an M has to appear next. Okay, that's exactly what happens if we find an M. It doesn't break. This is all one leg. It drops. Okay, we can catch that drop. Just another signal, just another pattern to indicate a reversal in the market. Okay. Sorry, I can't go more in depth with that. I just really want to keep this under an hour. So if you have any questions over that, let me know. Stop hunt low high, stop hunt high drop. What we're going to use for this signal is the 15-minute chart. Okay, the 15-minute chart is a great way not just to enter trades, not just to exit trades, but to also look for signals in the market. Okay, trend lines, 4 hour, 1 hour, 15-minute. Signals, 15-minute. Okay, mainly 15-minute. You can use 1 hour, you can use 4 hour. I like to use 15-minute. What we like to do when we're looking for a stop hunt is we like to look for a consolidation phase. Okay, and a consolidation phase, if you guys don't already know, is just a movement in the market that there's no major move. Okay, so you see like this, what is it called, horizontal movement in the market, no major movements up, no major movements down. That's the consolidation period, where again market makers are just collecting contracts. Okay, so let me find you guys a good example of a stop hunt. Oh man. Man, where's a good consolidation phase? Okay, let's just do this one. So we see a consolidation phase where there's no major movement in the market. Okay, sure there's a little raise, sure there's a little drop here and there, but no major move in the market. Well, this 15-minute candle here, obviously it did paint all the way down here, but it did have a pretty massive move to begin with. Again, just to collect, or yeah, to activate pending orders. Okay, and so a stop hunt is a false move in the opposite direction of the actual market move. Okay, again, a stop hunt is a false move from the actual market movement. So if the stop hunt appeared to raise for a 15-minute period, pretty drastically compared to the rest of the candle movements before that, guess what? That's considered a stop hunt. A stop hunt, this would be a stop hunt high drop. Okay, it's just a signal to guess what? Indicate for reversal as well. Okay, a stop hunt high drop. So another example of a stop hunt low high would be a stop hunt high drop would be no. No, that example. And only on a live call I can't find one. Okay, no worries, no worries. You know what a stop punt high low is. You know what a stop punt high drop is. So basically, again, all that it is a false movement in the opposite direction of the market. Okay, let me just play with my mouse here. If the market is moving in a sideways direction, no major movement up or down, it just looks like a heartbeat, right? Let's just say that there was a quick movement up. Quick movement up. If for the next candle we see a huge drop, okay, a huge reversal, the actual market movement, we can consider that a stop hunt high drop or stop hunt high reversal. If we see another movement in consolidation phase where there's no major movement, but we see a sudden drop out of consolidation, we can call that the stop hunt low high, where there's a false movement in the market where market makers wanting to trick traders, okay, and either closing out their buying order or activating their stop loss or getting them to close out of the trade, when in reality, markets move up, they lose their money. Okay, stop hunt low high, stop hunt high drop. Lastly, really quick, for the signals and patterns in the market, there are railroad tracks and there's also an evening star formation or morning star formation. So what we can do is we can click on JPY, and I think there was one pretty recently. I thought there was one pretty recently in JPY. Oh, sorry, 15-minute. Okay, cool. Pretty awesome example. So this is JPY 15-minute. This is actually on August 27th. Okay, so this was a couple of days ago, where we see the market moving down. This is a pretty bearish momentum. Okay, and it forms this railroad track right here. The next candlestick, guess what? It rose up, came back down. It dropped, and it came back up, and actually painted with this little midget candle, what we call an evening star or a morning star. You know how it looks like a pretty little star, right? Cool. So guess what? We consider that an evening star. We consider that a reversal in the market. Boom, choose back up. Easy 20 pips, easy 30 pips, whatever that is. Okay. Let's see. Another example is CAD. CAD, we can look on the 26th. And okay. We can consider that. We can consider that an evening star. Okay, so let's just see here. Okay, I put this trend line here, and it was following perfectly, just beautifully, and didn't break until this candlestick right here, and it broke pretty significantly. And guess what? Evening star formation, dropped down, came back, rose all the way up here, didn't paint until it came back all the way down here. Midget candle. Okay, that's an evening star. That's a morning star. Reverse on the market. Boom. Easy 20, 30 pips. Okay. So again, all those indicators are just a way to just help us analyze the market, just to help us know what's going to be ahead, what's the next step in the market. Okay. If we didn't have these indicators, we would literally be blind. And again, sorry I rushed through every single one of them, but I don't really have a lot of time. I do want to help you guys. Nuts! What is this? My laptop is about to die. So what we're going to do, guys, is we are going to break down the markets, and we're going to also look for entry points. Okay. So let's check the euro US dollar. And let me see if my laptop is actually plugged in the wall charger. I'll be right back. Alright, it looks like it is. Let me check this really quick. Nope, it's not. That's a Alright, pulling in a live call. Let's see here. Now it's charging. Okay. Let me put my headphone back in, guys. Okay, I'm back. My bad. Oh, I forgot to tell you guys. This is just a little side note. I'm starting to message you guys in Elite to remind you guys about the Elite monthly chart because again, we launched Elite on the 1st of August, and it's about to be the 1st of September. So, if you guys do want to continue your membership in Elite, I'm just reminding you guys a couple days in advance. Hey, if you want to pay early in advance, you can just send me a Venmo payment, and you'll be good until the 1st of October, okay? And for you guys that join the 2nd of August, the same, 2nd of September, and so on and so forth. So I'm just giving you guys a couple days in advance. I don't want to scare you guys, but I just wanted to remind you guys that I am going to start reminding you guys about that, okay? So let's break down the markets really quick, just as a team. I don't want to really teach you guys this. I don't want to really give you guys a lecture. I want you guys to help me break down the markets. I want this to be a very interactive discussion to help you guys learn at a much faster rate. Okay? So, and I'm also going to talk about entry points while we're doing this, just to give you guys a better perspective of when I would actually enter a trade, if I were to take that trade. Okay? So, let's start with the Euro USD. And if you guys don't already know, these vertical lines just measure the days in the market. So just to give you a better idea, so this was market opening on Sunday, and it was a pretty bearish, or sorry, it was a pretty bullish movement, and this was whenever London actually hit, or this was during the London session, and the end of US session was a drop to come back down the trend line, and it finished back up here. Okay, so this was Monday's movement. Monday's movement was a very, very, very bearish movement. Followed this trend line down pretty nicely, came back up, and it ended over here. Okay, so this is just Sunday to Monday, Monday to Tuesday, Tuesday to Wednesday, Wednesday to Thursday, Thursday to Friday, Friday 5 p.m. Okay, so this is the Euro USD 1 hour chart, and I want you guys to, let me just scroll here to the very end. Okay, I want you guys to help me break down and analyze the Euro USD for the entire week, last week. What do you guys see what was happening in the market? Or what would you guys use as indicators to help you guys analyze the market for the Euro USD for the past week? All right, all right, all right. Good stuff. Are you guys kind of confused or lost about indicators, or what did you guys have questions about?
What was the question? I walked away for a second.
No, no worries, no worries. I was just saying I wanted to help you guys break down the markets, right, for the entire week of the Euro USD last week. And so I'm just asking you guys, what would you see in this market of the Euro USD for the entire last week? Like, what would you guys use as indicators? What do you guys see? Do you see a stop hunt low high? Do you see a stop hunt high drop? Do you see M's? Do you see W's? All that good stuff. Railroad tracks, evening stars. What do you guys see in the market?
I think I see a V in the middle, but I'm not sure.
Okay. Okay, yeah, right here.
Yeah, it kind of looks, I don't know. I'm not too sure if it'd be a V, but...
Yeah, we're just looking a couple days back. And again, it doesn't have to be an M or a W right before that V, but if I don't see any real significant signals right before, then I'll just kind of throw that V away.
Yeah, yeah.
You know? So,
Well, there's a
yeah.
railroad track there. Like, I don't know if that's the one you showed earlier, but on the left, I think
this right here?
Looks like. Yeah.
Yeah, what I like to consider a railroad track are two candlesticks that form the same length. Again, just to indicate a reversal in the market. And this, I think it's a little bit stretched to be called a railroad track. I think this would be a little bit nicer to call a railroad track, but again, not a huge reversal. So that would just be a bad example. But what I do see, guys, here is a break in the market, right here using this trend line, a straight drop after a break in the market. Okay, so all that we're looking at is, look, and it even held right here. And once it broke right here, it dropped for the rest of the week. Okay, so I want you guys to really see the importance of using these trend lines and these horizontal support and resistance lines. I don't have favorites. I never have favorites, but I do use these more than the other indicators I just told you guys. Okay, and also you guys can see using this EMA, once it breaks, it drops underneath until it breaks right here, a little rise, then breaks again, under, and it holds under, breaks, rise, breaks, under. Okay. What else? It was extremely bearish throughout Tuesday and Wednesday. It held perfectly. So if you guys wanted to, you guys could have placed a sell right here and kept it, kept it, kept it, kept it. It held, but it didn't. Yeah, it retested, sorry, but it didn't break. It held, and we could have kept our sell right here. Okay. So for you guys wondering how to enter this trade, I honestly could have entered it right here, or I would have entered it right here. Okay. So what would I do after that? These are, again, 1 hour candles. What I would do after that is as soon as I have profit, I would place my stop loss to break even. I would move my stop loss to break even. What does that mean? Let's just say that the market moves back up and it goes to the negatives. I would never lose money in a trade. Why? Because my stop loss would be there to, in case the market ever goes back up again, it would just activate my stop loss and it would close out my trade. Okay. What I would do then is I would hold my trade until it gets to a little bit nicer profit. And guess what I would do after that? I would move my stop loss, which was to break even, and I would move it down, closer to the trade. Maybe 10 pips away, maybe 15 pips away. It really depends on the market. But usually it's 10 to 15 pips away from the market. And it will continue to drop. It will continue to drop. And as it held right here, I knew it was going to drop even more. So guess what? As soon as the market dropped, and it did, I would move my stop loss from here even further down. Okay? So that means that if the market ever came back up to retest or to activate my stop loss, not only would it close out my trade, but it would close out my trade with profit, with really nice profit. Okay? And I would do the same thing. I would ride this market all the way down. Like a roller coaster.
How many pips do you do until you move it? Do you do like 10, 20, 5 pips when you move it down, or?
Usually after 10 to 15 pips, I like to move my stop loss to break even. And after, I really don't measure after that. I just see, okay, I'm up 50 bucks. Guess what? Let me move my stop loss closer to 30 bucks, right? So if I were to ever lose my trade, I would close out my trade with 30 bucks. So
Okay.
I wouldn't really consider calling out, 10 to 15 pips. Okay, move it up. Okay, after 10 pips, move it up. I just kind of eyeball that. But everything else, whenever I do move it up, I think it's after 10 to 15 pips. I'm just used to 10 to 15 pips. That's just what I was trained to do. Okay. So guess
how
what?
did you know? How did
Oh,
you
wait,
know? Let's say you were to have sold. Then when would you? How would you know exactly when to do that?
Wait, what's the first question that you asked?
I mean,
What's
okay,
the first part of your question?
the trend. All right, the trend's obviously it's going down, and you said the best part to sell in it was I guess wherever you started. How would you know that was the point to start?
Well, I would look for another retest in the market, which would be this one.
Okay.
Okay. So let's just say, good question. Let's just say that the market is down here. Okay, the market's down here, and we place this trend line right here. So anything after this point over to the right of this candlestick has not been formed. It's just blank. Okay, just use our imagination. So let's just say the market's right here. We can eyeball this, and we can see that it's pretty far away from this trend line. It's not close. We would not consider that a retest in the market. So what I would do is if we caught this market where the candlestick is right here, I would wait until it got close to retest this trend line, or retest multiple trend lines, like this one right here. If I had this horizontal support line right here, and it did not break, it held, and it held very nicely, I would place a buy, and I would place that buy for a good 15 pips. 15 pips, whatever this is.
Okay.
And same thing with this trend line. This trend line, it held really nicely. So what would I do? Let's just say that the market was right here. I would wait until it gets close to this trend line, and I would wait for the retest. Okay, if it were to break, I would place a buy right here. If it did not break, if it held, I would place my sell. If I hadn't placed it already, I would place my sell right here. and I would place it, and I would just play the down play. I'll just play the short play. And same thing with this. Yeah, what's up?
Do you enter on 15-minute chart or do you enter on the hour chart?
No, 15-minute.
Okay.
No, yeah. I don't
That's what I
enter
thought. I just wanted to confirm.
ever in the 1 hour. Yeah.
Cool.
I'm
And
just
then,
showing you guys, for example.
one more
the trend line
question.
on
Do
the 1 hour.
you draw your trend lines on the hour though, or do you kind of just does it vary?
Do I draw my trend lines on the 1 hour?
Yeah, in the 1 hour, or does it just vary between 4 hour?
Yeah, good question. Good question. I draw my trend line first on the 4 hour.
Okay, gotcha.
Get a better view of the trend of the market, because the trend is our friend. Okay, so the 4 hour depicts the trend a lot clearer than the 1 hour and the 15-minute. Obviously, because the 1 hour is a little bit more precise, and the 15-minute is even more precise. So I like to start with the 4 hour, and I like to work my way down to the 1 hour, but then to the 15-minute.
Okay, cool.
Okay, cool. Okay, so that's the euro. We see that it did break the trend line right here, and it has been rising. Actually, yeah, this is today, so it has been rising all day today. So what we can do is we can actually place our trend line right down here, and we can say, hey guys, look, it's been rising. It didn't really come back to retest, but it placed this horizontal line that I placed a couple days ago, honestly. It broke this, and it came back, retested, and it held. Guess what? We know it's going to rise. Okay? Came back, retested this trend line, and it held. We know it's going to rise. Okay? It's actually right now retesting this trend line. So what I would do, guys, if you haven't placed a trade in the Euro USD market, wait, who's talking right now? I don't want to mute them. They're being a little bit loud. Is it Steven? Is that you? Do you have a background noise?
Nope.
Zevin is muted. Mariano, I think I'm gonna mute you, bro. Let's see if that's. Is not you? Jason, is that you?
Oh, nope. I'll just mute myself.
Ah, it was Jason.
It was me. There's nobody around me.
Nope. I don't know. That's so weird. Anyways, I had some background noise in my feed. We'll continue. So, guys, for the euro, if you guys haven't placed or entered in the Euro USD market right now, I would wait to see how this candle paints. If this candle paints below this trend line, and if it paints below this horizontal support line, I know for a fact it's going to drop. Okay? But if it's going to hold, and if it's going to hold here, I know that it's more than likely is going to rise. And so look for the Euro USD in about, 1 minute. Okay? Let's just wait here for 1 minute. I can wait here for 1 minute. So it looks like it is going to hold, but then again, in the last couple of seconds, it could just completely freak out and break both trend lines. I've seen that before. So do you guys understand like my concept with entering trades concerning indicators? I only enter trades whenever it's close to my indicators. Whenever I actually have a retest using my indicators, okay? If the market's all the way out here, number one, it's not close to this support line. Number two, it's not even close to this trend line. I would not place a trade because guess what? It can do two different things. Okay, it just held. The market just painted, or the candle just painted. I can't even talk tonight. The candle just painted. It held. It looks like it's going to continue to rise. Okay, so there's a couple of reasons why I wouldn't enter a trade right here. Number one, I do not know what is going to happen here. This could just rise, and it could rise forever, or it could drop back down. So if I were to place a trade right here, I would have a 50-50 chance of what's going to happen. Okay, so I would actually wait until it actually came in contact with one or both of my indicators. Again, the more indicators that you have, the better idea of what you can expect is going to happen in the market. Okay, that's Euro.
Hey, Mark.
Yeah, what's up?
From horizontal lines, is it basically the same as trend lines? Just try to hit wherever the most candles retest, or you know what I'm trying to say?
Yeah. Horizontal lines, they are a great way to look for reversals in the market. Okay, so look at this right here. This is GBP USD 4-hour chart. Okay, and if you place this horizontal line right here, where these two candles failed to penetrate, okay, it actually tried, and it painted all the way up here. We can see that it came back down to this exact same trend line, and it failed to penetrate. The prices were rejected. Guess what? We can then concur there's going to be a huge spike in the market, and that's exactly what happened. Okay, so again, the more candles it actually fails to reject the price at this line, the stronger this horizontal line is going to be.
Mm-hmm.
Okay, so for another example, let's just say not that strong. Let's off. I don't see a good example right now. I don't want to take too much time with that, but yes, you're right. All that you're looking for is just to find where multiple candles, where the prices were rejected. Okay? So you'll look for reversals in the market using those horizontal lines. Okay? So looking at GBP USD, we're going to look at the 1 hour chart, and we can see that last Sunday, oh my gosh, come last Sunday, there was not a lot of movement. We did see a pretty bullish movement following this trend perfectly, broke and it dropped. Again, opening Monday, there was not a lot of movement, pretty nice drop in the end of London session to US session. And I do have this trend line here. It's from a 4 hour chart, and we can see here that this market, GBPUSD, followed this trend line beautifully. And whenever it did penetrate, it penetrated and it fell like crazy. So I'm pretty sure I called out GBP drop on, what day was this? Sunday, Monday, Tuesday, Wednesday. So Tuesday night, there was a huge drop in GBP USD. Okay, and I'm pretty sure what I told you guys was look for these two trend lines. Okay, these two trend lines, watch what happens. If this penetrates this trend line, there's a pretty good chance that it's going to rise. If it doesn't, it's going to hold and it's going to continue to drop. But if this trend line penetrates, look for the drop. And guess what? It penetrated and it just fell. And it fell nicely. Okay? Let's see here. A couple of nice trend lines that you can very clearly analyze the market, give you guys a better idea of what to expect and really predict the markets. Okay? Very nice rise, break in the market, drop. Very nice rise in the market, break and drop. We're going to look at the 15-minute and look at what the GBP market is doing currently. Okay, we can see that there's a pretty nice gap whenever Sunday market opened. We could have placed that gap, but also we can see that, oh sorry, I was not supposed to place that there. Let's place that there. End of the candlestick, not the candle wick. Okay. So just by looking at this trend line, we can see that the market is not close to the trend line right now. I would not trade GBP/USD right now. I would just wait until it actually came back down to retest this trend line, or I would see what the heck is going on with this horizontal support line right here, or this resistance line up here. Okay, because it looks like it is going to continue to rise, and so I would just keep an eye out for 1.54404 right now, and see if it's going to, if this is going to hold and be a strong resistance line. So keep an eye for that. Let's see here, USD JPY. Same thing, guys. Whenever you fully understand indicators and signals and patterns in the market, you just look at a blank sheet and it's just a canvas waiting for you guys just to paint. And like I've told many of you guys, this is just like a kid's puzzle. And once we understand how to solve this puzzle, we can solve it every single day, every single week for the rest of our life. It's just like clockwork. It's just like algebra. Once you know how to solve for X, you can solve for X any day of the week. Okay? Just to give you guys an idea of what I mean, two trend lines here, pretty dang powerful. It broke and shot up, broke again, dropped, broke, and it rose again. Followed this trend line here until it broke, dropped. Followed this trend line here, broke, dropped a little bit, held at this support line right here, rose up, followed this trend line. This is just like clockwork, guys. This trend line was a pretty dang powerful trend line, but I'm kind of sad because it didn't drop that much. It actually held at the support line right up here, and it continued to rise again for a little bit until it just began to fall today. So let's look at DBY right now. And again, guys, whenever you're placing these trend lines, if it's falling, you want to place the trend line at the top or above the actual market. Why? Because if we place a trend line, let's just say that the market's falling, right? And we place a trend line right down here at the bottom of the market, we're not really measuring anything because it's already fallen, right? If it breaks this trend line, it's just going to fall some more, right? So instead of just measuring a more fall, a confirmation that's going to continue to fall, we don't need to know that. We're looking for reversals in the market. We're looking for 100% confirmation that a trade is going to go exactly our way. So we would measure a reversal in the market. Okay, where it's going to rise, it's going to break this trend line and it's going to continue to rise. Okay, so if the market is dropping, if it has a bearish momentum, we place trend lines above the market. If the market is rising, we will place a trend line below the market if we're looking for drops in the market. Okay, so this is JPY. This is the yen. It has a pretty bearish momentum. What I would do is I would actually do this right here. This looks like a pretty good horizontal line that's right over here. Let me see if that's good. Wick seemed to hold. Candle breaks right here, shoots up. Okay, I would play this call right here. Wait until the market actually comes down to these two trend lines down here. You guys know if it breaks, it's going to continue to go in that direction. So just look for this spot right here. This is horizontal at 120.910, and the trend line is placed above the market in the yen, 15-minute. Okay. Let's look at. Dang, we passed an hour. Shoot. Okay, really quick, guys. Really quick. Gap in the market, closed right up after an hour, dropped. Not crazy movement. I'm not a big fan of this movement right here. I call these tidal waves, where there's not a lot of profitable trades that we can take, just because it's just like a tidal wave. It goes up, goes down, goes up, goes down, goes up, goes down. Just a great way for market makers to make a lot of money off retail traders. We don't like to trade these tidal waves, okay? But look at this, guys. Look at this. I placed this horizontal support line, I think back like a couple days ago, if I'm not mistaken. I think all the way back here. This was like back in Tuesday. Oh, wait. Sorry. We're all the way up here. My bad. So maybe this was like on Wednesday or something like that. Maybe I placed this on Wednesday. But look at how well the market has respected that horizontal support line. Okay? Came back down, retested, held, shot back up. Came back down, retested, held, shot back up. Came back down, broke. But it didn't really drop that much. It came back and it actually broke again. So now it's above the support line again. So what I would do, guys, is I would just keep in mind this 0.71325 horizontal line on the Australian dollar USD 15-minute. Okay. NZD. I don't really like this play just by looking at the 15-minute. Let me check the 1 hour. Ooh, 1 hour. There's something here. No, not really. I'll place it anyways. Okay, 15-minute. Obviously, the market is not even close to this trend line, but if it ever comes back, we'll know exactly what's going to happen. So maybe come London session, maybe it's going to come back and it's going to break this trend line and come back to this trend line. It might not. It might just completely just fall and break the support line, and maybe this one as well. So keep an eye on this market. I really want to trade that right now. USD CAD, 1 hour. Let's check the 15-minute to see what's up. Not a lot of crazy movement in the Canadian dollar tonight. So I don't know. It did come back pretty close to this resistance line, and it held nicely. So I would have placed that sell right there. I think I caught that, but I didn't. So okay, last one. Gold, guys. Gold. Oh, that's nice. That's pretty. Check this out. Came back, retested, held. You could have placed a sell right there. Moved stop loss right here. Came back. Would have activated your stop loss. You would have made 10 pips. Came back up. Broke this trend line. Place a buy. Boom. 10 pips. Move stop loss right here. Boom. Taking out another 10 pips. Okay. So you could have made 20 pips in just a couple hours. So that's pretty much it, guys. The group chat, again, I'm going to call up my trades tonight. I'm going to stop sharing my screen. So the group chat tonight, guys, again, just like every single night, I'm going to call out my trades, and hopefully now you guys get a better idea of those red lines and what exactly do I mean whenever I say penetrate or hold or retest. If you guys have any questions covering that, just shoot them through the message. We're going to help you every step of the way if you don't fully understand that. But hopefully you guys get a better idea of not just me telling you guys what to trade and how to trade it, buy euro or sell Canadian dollar, but actually set up your markets and have the same trend lines that I do, so you guys can fully analyze the markets on your own time as well. So while we have the group chat going on, while we're brainstorming together, while we're game planning together, saying, okay, if this breaks, look for this. If it holds, look for this. You can see on your own chart, okay, well, I'm getting a better idea of it. You're going to learn at a much faster pace than what I did originally. That's my main purpose. That's my main goal with this, is to help you guys master the secrets of the Forex market at a much faster pace than what any other retail trader would ever accomplish. Okay? So if you guys have any questions covering this webinar, shoot them through the group chat. And again, also, guys, I forgot to mention, using that 6-month step-by-step plan that we can utilize and help any trader, beginner to advanced, take them from $100 to their live account all the way down to $6,000 a week after 6 months. I want you guys, if you want to, show that to your friends and just give them the whole idea of what we're doing in the lead team. Okay? And if they wanted to, they can join our free trial membership just to get a better idea, just from an insider's perspective of how we run things in the lead team. And from there, if they like it, I'll send you 40% commissions every single month that they're active. Okay, pretty cool stuff. I just want to help you guys out and earn just another source of income to help you guys open up your live account with even more money than what you're planning on doing. Okay, so again, if you guys have any questions covering this, covering the 6-month plan, covering literally anything, shoot them through the group chat. And I'm going to be up pretty late tonight helping you guys out as well. So did you guys have any questions really quick before we end this call?
Yeah, I got one quick question on the Fibonacci lines.
Yeah, what's up, man?
So you were saying, like, for example, if it's below like the 38 and it like breaks that and it breaks it pretty, with like conviction, that's just like, it just means it's going to rise, right? It's just kind of like a trend line at that point.
It's another indicator. Yeah, it's just another indicator to help us analyze the markets. The 38 and the 62 fibs are the most important. And so if we place our Fibonacci levels, the last major move in the market, again, 4-hour chart only, but if we look at the last major move and we analyze the Fibonacci level, we place them, and we see that the market is going to get close to the 38 or it's going to get close to the 62, it's just another indicator. It's just like another horizontal line that we've never placed before, but it's there using the Fibonacci level.
Okay, cool. Thank you.
Yeah, no worries, no worries. Anybody else?
Yeah. I had a question about the gaps.
Yeah, for sure, man. What's up?
For the gaps, how exactly can you tell like when to place your like a buy or sell on a gap?
Okay, gap trading is really easy. Okay, so every single Sunday, not every single Sunday, sorry. The majority of Sundays, news occurs where the gross domestic product of a certain currency has been dropping, or an oil boom in this country has, whatever. News comes out, and come Sunday, markets open at 5 p.m. Eastern Standard Time, the market actually opens at a different price point than what it was supposed to. And that's called a gap. Okay? So let me give you an example. Let me go back to share my screen really quick, because gaps are really easy to see. They're really easy to spot. Let me see if there has been a gap somewhere. Okay, right here. Now that's a bad example. I don't like that gap. Okay, right here. Let me zoom in a little bit. Can you see my screen, bro?
Yeah.
Okay, cool. So this is a red candle, right? This is a bearish candle. That means that the next candle should have opened up right here.
Right.
Okay, but it didn't. In the euro market, the candle opened up all the way down here. Okay, so guess what happened? There was news that came out that the euro had such an influence in the market that the price actually opened up at a different point. But what we know, okay, the secret about gaps is that they always close. Whether it's in the next 15 minutes, whether it's in the next hour, whether it's in the next couple of hours, but the gaps always close. This one just happened to close in the first couple of minutes. But if you didn't catch that, then you could have caught it in the next hour. Okay? So let's just say that in this example, the euro opened up all the way down here. we knew that it should have opened up down here, but it actually opened up at the bottom.
Right.
So we would have placed a buy right here, and we would have wrote it all the way up here. Okay? And
Okay.
also, if you really wanted to, you could have placed this trend line all the way down here, and you could have said, okay, it was going to continue to rise. We would have seen this support line right here. It broke it. We could have continued to rise, and so on and so forth. It's just another indicator to help us win some more pips, just to catch some more pips and make us even more happy.
Okay.
Yeah, definitely. But gap trading is an extremely easy way to catch pips, especially early in the week. For example, let's just say that, again, if the next candle should have opened up down over here, let's just say euro opened up all the way up here. Guess what we would do? We would place a sell because we know that gaps always close, whether it's in the first couple minutes or the next couple of hours. We don't really know. But we would place a sell, and even if it might have rose just a little bit, we know it's going to come back down to fall. So that's just a little bit risky because sometimes, and I've seen this a couple of times, sometimes let's just say it opens up all the way down here, we place a sell, and the markets rise all the way up here for hours and hours and hours, and then it comes back down and closes. So depending on your risk management, depending on your stop loss, depending on a couple other things, you can trade gaps, and you don't have to. It's just another way to catch pips early in the week. But again, sometimes it does do that. Sometimes it goes in that opposite direction before it actually closes the gap.
Right.
So keep your eye on that. Be aware of that.
Okay. Thank you.
Okay. Yeah, no worries. Anybody else?
Yeah, I had one question regarding trend lines. When you're putting them on the bottom of or on the top, they're one on the candle. Is it supposed to touch the corner? Because on the app for MetaTrader 4, I've been trying to do it, but it automatically drags it to the middle of the candle when I try to put it on the corner.
Yeah, the middle of the candle works.
Oh, okay. Just making sure.
Yeah. You want to measure them. At least you have that right. At least you have the top of the market or the bottom of the market. If the market is dropping, you want to place them at the top. If the market's rising, you want to place it towards the bottom.
Yeah.
Because you want to measure exactly. You want to measure the reversals in the market. As long as you have that right, you're good.
Okay, for sure.
Okay. Awesome. Anybody else? All right, guys. Thanks for hopping on. Like I said, shoot your messages to the group chat. Welcome the trial members. Make sure that they feel at home because, of course, we do want to grow with this team. We do want to share this idea and this concept, this knowledge with as many people as possible. And just this elite team, it's just a stepping stone. I'm really just trying to find my top serious traders using this elite team to help me accomplish my next goal, which is to spread this idea, this concept around the world and help as many people as possible. So I really appreciate you guys for everything that y'all do. If you guys have any questions, shoot them through the message. Utilize that tool as much as possible, okay? I'll talk to y'all later. Hopefully we'll see each other on the next Sunday webinar call. All right, guys. Y'all have a good night.
Thank you, Mark.
Thanks, guys.
Have a good night.